All right, welcome back to FX Insights. I am so excited for this, episode 2, and we're diving into, I think, something even wilder than what we talked about last time.
Oh, is that possible?
Yeah, I think so. We're going into Forex trading,
Right.
and I've been doing some reading and some prep on this, and it is way more intense than I thought.
Yeah, I'd agree with that. It's pretty wild out there.
Yeah, so we're going to kind of tackle 2 major concepts today and really try and break them down. And regardless of if you're a beginner in Forex or you're already trading like crazy, I think this deep dive is really going to be for everyone.
Yeah,
We'll
absolutely.
break down some things that maybe you haven't thought about, or maybe you're a pro and this is just a little refresher for you.
Right.
But of course, before we get started, we have to say this quick disclaimer.
Of course, yes.
The information in this deep dive is purely for general knowledge and entertainment purposes only.
Right.
It is not financial advice. Always consult with a qualified financial advisor before making any investment decisions. Yeah.
Very important.
Yes, very, very important. Okay, so let's get started. I found some crazy things when I was prepping for this.
Really?
The Forex market, it trades roughly $5 trillion
Wow.
per day,
Every single day.
every single day. And
A
that's
trillion.
more than stocks, commodities, you name it,
Yeah. Every.
like everything combined.
So that's really a mind-boggling number.
It's huge. It's the big kahuna. So no wonder everyone wants to kind of get a piece of this, right?
Yeah, absolutely. It really does highlight how massive this market is and how global its reach is.
Yeah, it's crazy. So let's kind of break down some of the basics. And the first thing we're going to tackle is volatility.
Yeah.
And I thought about this. I'm like, okay, how do you explain volatility? Think that you're surfing,
Okay.
right? Big waves, you get that thrill.
Right.
But also, there's a bigger chance of wiping out
Oh, yeah.
if you don't know what you're doing.
Yeah, I'd say so.
So volatility is kind of like that in Forex, right?
I think that's a great analogy. Volatility basically is looking at how much the price of a currency pair fluctuates over a certain period of time.
Right.
So if volatility is high, those price swings, just like those waves, are going to be huge.
Yeah.
So that means greater potential for profit, but also a higher risk of wiping out, just like you were saying.
So it is a gamble. So it's kind of like riding a roller coaster blindfolded, right?
Exactly. And like a roller coaster, volatility isn't inherently good or bad.
Okay.
It's about how you handle it and how you manage it.
Okay.
Skilled traders look for volatility because it creates those opportunities.
Oh, okay.
But you got to have a plan, right?
Oh, for sure.
You got to have a risk management plan in place.
Right, because you could go up or you could go down.
Exactly.
So the higher the volatility, the higher the stakes.
Yeah, I think that's a good way to put it. And like we learned in the Axiary article, sometimes economic or political events can cause those volatility spikes to go crazy,
Oh, wow.
which can be amazing if you're on the right side,
If you're on the right side, yeah.
but really bad if you're not.
So if volatility is the roller coaster, then what is liquidity?
Oh, good question.
FRSX.com mentioned that it was like a key factor in all of this. Is it like the seatbelt that's keeping us from flying off the roller coaster?
Not quite. I think about it more as the engine that keeps the roller coaster running smoothly, right?
Okay.
So liquidity is really about how easy it is to buy or sell a currency pair.
Okay.
And a market that's highly liquid means there are lots of buyers and sellers.
Oh.
They're ready to trade, so you can easily enter and exit
Okay.
without causing major price,
Disruptions?
disruptions. Yeah.
Okay.
So lots of players means generally smoother transactions.
Gotcha.
And this is where it gets interesting. High liquidity usually means lower volatility.
Really?
Yeah. And FRSX.com put it in a really, I think, easy way to understand it. It's like a highway with smooth flowing traffic,
Okay.
right? So, lots of cars, in this case traders, keep things moving steadily. You're less likely to see sudden jams or crashes.
Okay, that makes sense. A lot of people in the pool, it's not going to, make as big of a splash.
Right.
But then Axiary said that even this massive market, Forex, can experience dips in liquidity. So are you telling me that there are times when that highway is just a dirt road?
Believe it or not, yeah. There are times when things slow down.
Really?
And that can create some tricky situations for traders.
Okay, now we have to unpack this a little bit
We do.
because that sounds like a recipe for disaster.
It can be if you're not prepared.
Okay.
And that's why we're going to delve into the specifics of these low liquidity periods in just a moment.
Sounds good to me. All right, so we're going to venture into those low liquidity periods. What exactly are we talking about here?
So low liquidity really just means there are fewer buyers and sellers.
Oh,
They're less active in the market.
gotcha.
So it's like rush hour versus, 3 in the morning on that Forex highway.
Okay.
Fewer cars, more space, but also slower movement and potential delays, right?
So what kind of delays are we talking about? And why should I care?
Well, imagine you're trying to exit a trade and you need to do it quickly,
Okay.
but it's one of those low liquidity periods.
Okay.
So with fewer participants, it might take longer to find a buyer
Okay.
who's willing to meet your price.
Gotcha.
This can lead to what's called slippage.
Slippage?
Yeah, where you end up selling at a less favorable price
Oh, okay.
than you wanted.
So like trying to sell a hot dog at a vegetarian festival?
Exactly.
They're not ideal.
Not ideal market conditions.
Okay, yeah.
Another issue is wider spreads.
Okay.
Remember, the spread is the difference between the buy and sell price
Right.
of a currency pair. When liquidity is low, those spreads tend to widen,
Okay.
meaning you're paying more to enter a trade,
Gotcha.
and that can reduce your profits.
So I'm seeing some potholes in this road now. When do these liquidity dips happen? Is there any way to see them coming?
There are definitely some predictable periods.
Okay.
Think holidays, everyone's off celebrating, so trading activity slows down.
Right.
Weekends, major financial centers are closed.
Oh.
Things are quieter.
So it's like knowing when to avoid rush hour.
Exactly.
Just stay off the road during those times,
It can be a smart strategy.
especially if you're a beginner.
Yeah, if you're trading with a shorter term perspective,
Yeah.
it's a good idea.
Now, Axiari also mentioned financial crises as a potential trigger
Right.
for low liquidity.
Yeah.
What happens to the market in those situations?
That's when things can get a little hairy.
Yeah.
During a financial crisis, uncertainty and fear often grip the market.
Okay.
Traders can become hesitant to buy or sell,
Right.
and that can lead to a rapid decline in liquidity.
So like everyone's slamming on the brakes at once.
Exactly. Chaos ensues.
Yeah, I'm good. I don't want any part of that. So let's say, though, I am determined to navigate these rough roads. Any tips?
There are definitely some strategies you can implement
Okay.
to minimize your risk. One is simply being aware of those predictable periods.
Okay.
We talked about the holidays, the weekends.
Gotcha.
Planning your trades around those times can help you avoid some surprises.
Basically, check the Forex calendar before you hit the gas.
Absolutely.
Okay.
Another strategy is to adjust your order types.
Okay.
So instead of using market orders, which are executed at the best available price,
Right.
consider using limit orders.
Okay.
With a limit order, you set a specific price
Gotcha.
at which you're willing to buy or sell.
So it's kind of like setting a price floor.
Exactly.
I'm not going below this.
Yeah, no matter how slow the traffic gets.
Okay.
And of course, risk management is super important.
Always.
In low liquidity conditions, it's even more important to manage your position sizes carefully.
Right.
Don't risk more than you can afford to lose.
Got to keep those seatbelts fastened, even if you're on a seemingly empty road.
For sure.
I'm seeing a theme. Awareness is key. I feel like there's even more to unpack, though.
Oh, absolutely. This is just scratching the surface.
Yeah, Forex can be pretty crazy.
Yeah, the Forex market is full of twists and turns.
But I think we've laid a good foundation
Yeah, I think so too.
for our listeners to kind of start thinking about, okay, how do I approach this?
Right.
What should I be aware of?
Absolutely.
So we've talked about volatility. We talked about the good, the bad, the ugly of liquidity. But what are the key takeaways here for our listeners? Like, what should they be walking away from this deep dive thinking about knowing?
Yeah, I think the biggest thing is just remembering that knowledge is power, especially in Forex. The more you understand how it works, the things that influence volatility and liquidity, the better you'll be at making decisions about your trading.
I love that. Knowledge is power.
Absolutely.
So let's recap. Volatility, it's a wild ride.
It can be.
It can make you a lot of money, but it can also,
It's risky.
yeah,
But learning to read those signs, right? Understanding the things that influence it, having a plan, risk management.
yeah, risk management, so important.
Absolutely.
So volatility, it's not something to be afraid of.
No.
It's just something to be aware of.
It's a natural part of the market. And a lot of times, skilled traders will use that to their advantage.
Totally. It's like surfing. You don't try and conquer the waves. You learn to ride them.
Right. Exactly.
And there's liquidity, the lifeblood, of this market. High liquidity, smoother transactions, tighter spreads. things are just moving along.
Generally less volatile.
Right, but then we talked about those liquidity dips.
Right, those can create challenges.
Yeah, and just being aware of when they might happen.
Yeah, knowing those holidays, those weekends,
Yeah.
and adjusting your strategies.
And all the things we talked about, limit orders,
Right.
position sizing.
Risk management. Can't say it enough.
Yeah, risk management. So if our listeners could take away one thing from this whole Forex deep dive, what would you say it is?
I would say just remember that Forex trading can be incredibly rewarding, but it's not a get-rich-quick scheme. It takes patience, it takes discipline, and it takes continuous learning.
Oh, for sure.
I mean, the market's always changing, right? So you always got to be learning and adapting.
So true. It's a marathon, not a sprint.
I like that.
It's all about the long game.
Absolutely.
Well, thank you so much for sharing your wisdom with us.
Oh, it's been a pleasure.
And thank you to all of our listeners for tuning in to this episode of FXED Insights. We'll see you next time. Keep learning, keep exploring, and as always, happy trading.
Happy